Good morning. It's Friday, April 25th. Thanks for joining me. I'm Philip Streible, Chief Market Strategist at Blue Line Futures. So you do have U.S. equities. They were up at their highest levels here, 55, 53 on the S&P 500. Now dipping back below that 5,500 level, down about 25 basis points. You do have the Dow Jones down about 200, the NASDAQ down about 58. As U.S. equity futures here, they are turning lower after 3 straight days of gains on Wall Street due to a mixed picture with the tech earnings and trade negotiations. Just a few minutes back here, as I was putting together a lot of the notes for this particular Metals Minute, we saw President Donald Trump. He was talking here about trade negotiations and how they were going. And because of some of the discussion, we are seeing futures come off from their best levels here overnight. So you're seeing the dollar index. It is strengthening. The yen and the Swiss franc, they are retreating here with gold down about 1% as investor safe haven demand is fading a bit overnight. The rotation is taking place where we're seeing the 10-year yields coming off, so they're going into 10-year futures and also the 30-year futures. One part of the optimism here that we saw with the S&P 500 at its highest levels overnight was the Chinese government here is considering suspending the 125% tariff on some U.S. imports, including medical equipment and industrial chemicals like ethane. So there are discussions going on now with China, where China was coming away and saying that, hey, there are no discussions going on, and that's where we would get the rug pull in the market here. So there is dialogue that is taking place at the moment. If you check in on the CME's Fed Watch tool, because all week long we've had many different Fed officials speaking here, the market now favors about a quarter basis point cut in the June meeting and 3 cuts by year end. So it seems like we're finding some stability here with the CME's Fed Watch tool and also with the expectations for interest rate cuts going forward. So you look at precious metals overnight, you are seeing gold continue to correct, dip below that 3,300 level for just about a few minutes here. Now we're back over that 3,300 mark, down $40 on the session. You do have copper futures down quite big here, down about 1.5%, sitting at 482. That's down 830, and then you have silver down 16 cents here at 33.33. So it's down about 0.5%. The sell-off in the copper market as well as the gold market makes me slightly concerned on the silver market. But if you look at yesterday's video and some of the things that I outlined here, is that generally what takes place is you'll see gold futures, they tend to peak, and then once we turn the curve as far as what the particular crisis is that we are involved with, whether it's a financial crisis, whether it's COVID, whether it's now tariffs and trade war. But once we come out of that and we figure out a solution to the problem, you tend to see silver futures outperform the gold market, at least historically, because of the turn on industrial demand. So we'll have to see and dig into what is happening in the copper market. Is there anything that is noteworthy as far as the sell-off is concerned in there? And will silver be dragged down because of that here in today's session? So as far as the gold market's concerned, I'm still outlining a couple levels here of key levels of support that were resistance. So you have light support right around that 32.70 to 32.65 mark. Remember, old resistance is now new support. You come down to that 32.0190. That is now your next level of support below that. And of course, that upward moving channel that we've been stuck in for quite a while will be your next level. So those are kind of the 3 levels that I'm watching and identifying as possible entry points here for some of the clients here working with us. Not a recommendation to the public, but it's something that we're going to be continuing to monitoring because we have been patient with a lot of these metals markets and also been patient here with a lot of the outside markets as well because of the volatility that we're seeing here with a lot of the discussion with the trade talks. Now, if you look at gold, it is correcting after that volatile week here because on Tuesday, we saw record highs at 35.0990, and now we are about $200 below that level here as of this recording. So you can see the volatility that's involved with these markets here often justifies your paring back positioning, volatility adjusting your positioning, and then sitting on your hands here as far as not wanting to take that leap of faith in a lot of markets here. A lot of times you want to let things kind of play out and see where we're going to settle before jumping into the markets. And I think that that is something that we're seeing here, and it's reflecting into the ETF flows because exchange traded funds, they cut 40,000 troy ounces of gold from their holdings here in the previous session. It's the third straight day of declines. Now, if you look at the ETF sells here in the silver market, much more noteworthy here. 1.93 million ounces of silver were cut from that previous trading session here, bringing this year's net purchases to about 15 million troy ounces. So you're seeing a downtick in the gold market back at 7.8% here as far as year-to-date percentage change. And then you go to the silver market, 2.2%, but it's a big cut in the silver market. So we're really going to want to keep an eye on things. 99-1 on that gold silver ratio. And again, I'd say pay attention to that copper market here because of the fact that it's corrected so much. I'm going to dive into some different stories here in the copper market, some of the news that's been driving that market here, and I'll put that in the metals edge. So if you guys got any questions, give us a call, shoot an email to info@Blue Line Futures. And remember that futures and option trading, it does involve risk of loss and it may not be suitable to all investors. Good luck, good trading, have a great weekend.